Well, good afternoon. Welcome to Mindful Mondays with Exceeds Expectations Incorporated. My name is Marilyn Chappell, and we have our special guest on today, Melvin Gatson. He is a CPA, and we are going to be talking about how we can triumph over our taxes. Yes, it's that time of the year, and so it's really important that we make sure that one, that we're connected to a CPA or an accountant or a financial tax advisor at this time of the year, and not do it on our own. So with no further ado, I just want to turn it over to Melvin to just tell us a little bit about yourself, and we're excited to have you today.
Thank you. Yes, it's a pleasure being on. Um, Always an enjoyment to be working with Marilyn and exceeds expectations. Um, so, a little bit about myself. Um, I am a CPA, former college basketball player. I went to Park University in the Kansas City area, went to Sumner Academy, and um, my mother worked for the IRS, and so I decided, if basketball wasn't going to work out for me, then and I didn't make it to the NBA, then I would lean back on accounting as my plan B. So I got my bachelor's in accounting from Park, and then quickly realized that I wasn't going to be successful, in the accounting field without, having that CPA. And so you have to have a master's degree. So I pursued that and got my MBA from Park, and then later got my master's from my master's in accounting from the Keller Business School of Management. Worked in the corporate world for about 5 years, worked in public accounting for another few years, and then started my own business. And so that's what I do now. I specialize in helping small business owners and individuals, with their tax filing and tax planning needs. And so, really passionate about that and happy to be able to talk to people about that.
Awesome. We're glad to have you on today. Well, Melvin, one of our focuses this year is really focusing on health and finances, and really talking about and discussing how they correlate. And so I know even with taxes, I mean, it decisions, it impacts everything from work, your household, to where your children may go to school, to the activities that they participate in. Um, all of that can impact taxes, but we also know that it can impact emotions as well. And so, can you tell us a little bit about like the type of emotions, the type of state that people are in sometimes when they come to you to get their taxes prepared?
Yeah, absolutely. So, I've observed that a lot of people have anxiety around taxes. They feel that it's complex. They don't understand it. Um, and that's my biggest observation. Um, you know, because I do taxes and I'm always thinking about taxes. It does come pretty easily to me, but I understand that that's not what people do. Sometimes people have anxiety just around money in general, and they just don't quite understand taxes. And so, I take the position where I'm always trying to educate my clients, educate people about taxes, and so they can take more control over their tax situation, as well as, um, just easing some of that anxiety that they may have around taxes as well. And so, here to do that today for people who can triumph over taxes, that fear of taxes.
Absolutely. And so, can you just tell us about a couple of habits or even behaviors that one can begin to start doing in 2023 in order to be able to triumph over their taxes?
Yes, I would say YouTube is a powerful source. I would say, if people are wanting to learn more about taxes and ease their anxieties, so that they can kind of overcome any fear or lack of knowledge around taxes, there are a ton of YouTube videos out there. I would just say, find, someone that's knowledgeable with sound credentials on YouTube that can kind of explain, taxes to you. My website, GatsonCPA.com. I do have blog postings about taxes. I have an ebook that kind of talks about taxes for small business owners. So I would just say educate yourself as best as you can and ask questions. You can always reach out to me. But I would say one good habit that came to mind when you asked me that question was for those who are employees, if you have a job, a 9 to 5, look at your pay stubs. Look at your pay stubs when you get paid, and look at the different taxes that are coming out of your paycheck, and gain an understanding through either Google, YouTube, or asking a professional like myself, what are these taxes? What do they mean? And is there anything that you can do about these different taxes that are coming out of your paycheck? I would say that's a good place to start.
Yeah, and I like how you said ask, and so oftentimes that's one of our challenges is asking for help and asking for understanding. So I love that you you stated to ask, what do those taxes mean on your paycheck? So that way you gain understanding. And why would one ask that question?
Well, thinking in terms of, when I was an employee, working for a business, frankly, I just kind of took it for granted that the taxes come out of your check, and that's just it. I didn't understand that I had the ability to influence the amount of taxes that were coming out of my check, other than maybe, with changing the deductions on that form, they call it W-4. Aside from that, I didn't understand that there were other things that I could do to have an impact on the taxes. And so I would say there are a lot of things that are available to people that they just don't realize. And now, because with the passage of the Affordable Care Act, which was when Barack Obama was in office, healthcare is mandated. And so if you have healthcare through the health insurance marketplace, that's going to have an impact on your taxes. And so, I think that, now more than ever, people should be aware of what they can do, around their taxes. Hopefully that answers your question. If not, let me know.
No, it certainly does. I also think about like employer benefits. Oftentimes, people will ask, especially since I'm a financial coach or a certified financial coach, a lot of times when I have one-on-ones with individuals, they state that they don't want to take the employer benefits that are offered. And there's many different reasons of why they state that, but I always encourage, people to see how they can budget in their employer benefits, just because it can definitely be a plus to them all the way around, from their 401k, from their health insurance benefits, and it can actually save them money in the long run, shall they, if they don't have it at all. So how can just even like your 401k and your health insurance possibly impact, your taxes by taking advantage of that?
Oh yeah, I'm glad you mentioned that, because I definitely think people don't realize that, like, particularly health insurance, right? So some people may not be in a financial position to contribute to a 401k. I would encourage people to really think long and hard about making sure that they're not ruling themselves out on that 401k. Um, Quick moment on that. If you're someone who's making a certain dollar amount per hour or a salary, you can basically give yourself a raise by maxing out the 401k contribution at least up to the match that your employer provides. So, if your employer, say, gives you a match for any money that you put into it up to like let's say it's 6% of your income. And that means that if you put in, like, let's say you make $50,000 and you put in $3,000, your employer will also put $3,000 into that 401k. And so you've basically just given yourself a raise by putting that money into a 401k. There's tax benefits as well as, when you put money into a 401k. And those tax benefits are that the money that goes into that 401k is not being taxed. At least it's not being taxed when it comes to federal and state income tax. And so if you were to put money into a 401k and your company has a match, you are receiving multiple benefits. You're getting money from your employer, like free money that you wouldn't have otherwise have gotten, and you are getting a tax benefit on top of that, and you're saving money. And if you ever needed to tap that money or tap that fund, which, it's not ideal to do that, but if you did, it's there, for you as well. The other thing is health insurance, right? And other like health related benefits. So health insurance through your employer is pre-tax. And what that means is that if you look at your pay stub, you'll see that you have federal income tax coming out, you have Social Security and Medicare taxes coming out, as well as state income taxes coming out. And any money that's coming out of your check for health insurance is going toward that health insurance premium before any of that money is being taxed. And so, let's say you make $20 an hour, $30 an hour, whatever it is at your job. On your check, you're only going to get a portion of that because of taxes. But when it comes to paying your health insurance premium, your full wage is actually being allocated toward that health insurance premium instead of that after tax wage. And so, I think people should be aware of that. That basically you're getting a tax benefit for paying for your health insurance.
So good.
One
Yeah, go
other
ahead.
thing to mention, kind of align with that, is the use of health savings accounts.
Yes.
And so, like a health savings account is available to people who have a high deductible health insurance plan. And basically, a high deductible plan is just a health insurance plan where it's kind of typically going to be the lower dollar amount plan when they're giving you options about what type of insurance you want. It's typically going to be that one that's the cheapest. Um, that would be kind of more suitable for someone or like a family who doesn't really go to the doctor very often, no health issues. You typically just kind of have the health insurance as a precaution, right? And so if you have a high deductible plan, then you can use a HSA. And the HSA is basically you putting money into this account, which can be invested, it can grow, but you're basically like, let's say you were to go to the store and buy, like, say your kid has eczema, like my son has eczema, and you were to buy some eczema cream, instead of using money that's been taxed for that eczema cream, instead you have this money that goes into the HSA directly from your paycheck, and none of it's been taxed. So that means your $20 and $30 an hour is going into the HSA without being taxed at all. And then you can use that money that's in the HSA to buy, the eczema cream that I talked about, birth control, other over-the-counter medications. It just depends on what rules your company has around how you can use the HSA. But those rules have been relaxed over the last couple of years. And so that is saving you real cash money, and it's not a use it or lose it type of account. And so that means that even if you don't use all the money this year, you can continue to use that money. It's basically just like a checking account that's exclusively for health expenses. So when I use the HSA in the past, the way I've used it was typically like for things like eczema cream, birth control, co-pays for a doctor's visit, things like that. But every time you're doing that, you're basically saving money. You're giving yourself a discount on those services. And the last thing on that would be FSA. So FSA is kind of similar. It stands for a flexible spending account. That is a use it or lose it type of account. But there are some rules around, like you don't just, like, at the end of the year, you don't just lose all the money that you put into it. But FSAs are really good because typically your employer will put the money in there up front. So to give you an example, so I have kids and they have different type of FSAs, but the one that I used was a dependent care FSA, which means that I'm basically putting money into this account before it's being taxed to pay for my kids' daycare. So that means my $20 and $30 an hour is going into this account to pay for daycare instead of that $20 and $30 getting hit with tax and then me paying it. So I'm basically getting maybe a 10 to 20% discount on me paying for daycare. And so anyway, if at the beginning of my plan year, the help, when they have open enrollment, if I decide, hey, I want to put $5,000 into this account, they will give me the $5,000 basically up front, or at least a good chunk of it up front. And then they'll take it out of my paycheck over time. And so that allows me to basically experience some like cash flow benefits because I'm using this account and my employer basically loaned me this money and I'm paying it back through my paycheck. And so, and the nice thing is a lot of people don't know this, is like, let's say you are going to leave your employer like halfway through the year, or maybe 3/4 of the way through the year, whatever. If you haven't paid back all that money in the FSA, they don't make you pay it back. So there was times where I knew, because they do have that use it or lose it. Like, even if you pay all the money throughout the year and you don't use it, you actually lose it. And so because you're kind of at risk on that end, you get that other side of that benefit, that if you do use it and you leave before paying it all the way back, it's just your money. And so there was a time where I knew I was going to leave an employer and I took advantage of that benefit. I went ahead, took the whole FSA, basically maxed it out, and then left. I left the company. I already knew I was going to leave the company. And then I basically, gained like $1,000 or a couple $1,000. I wouldn't recommend doing that like repetitively, but if you already know that you're going to leave a company, taking advantage of the FSA and knowing the rules, making sure that they're not going to require you to pay it back is important. But yeah, that's about it on that topic.
No, I love it. I love it. I love it. I love it. Because these are just small little things that can make a big difference, and this is all about being proactive rather than reactive, right? And so being at the beginning of the year, if you know that you're going to be going to the doctor this year, you're going to have to pay co-pays. You know that you're going to have to pay for different prescriptions. It just may benefit you to open up an HSA plan. So then that way you can allot money per paycheck. So it might look like where you put $25 in every paycheck, or maybe it might be $100 every paycheck, but you're saving money on the front end without having to pay taxes, and you're not having to deplete your checking account for these things. And so these are just little ways, on little tips and tools on how, not only how you can save money, but also how you can just be proactive with your finances, with your health care, as well as with your taxes at the end of the year. And so I always like to encourage too, is to make sure that you, when you're looking for a tax professional, to Ask them questions, interview them just like you would interview anybody else. If you would go to a financial institution, interview them before you open up a bank account. Do the same thing with your CPA and make sure that they're knowledgeable, make sure that they're passionate. One thing about Melvin is he loves to educate around taxes and educate you around your specific situation. And I think that is key. And so Melvin, that leads me to my next question. You know, in 2021, 2022, you know, a lot of people begin to start their own businesses. A lot of individuals, and not necessarily an LLC, or not necessarily I would say like a LLC, like a small business,
Mhm.
but an individual who has that side hustle, that they still opened up an LLC, but they're still operating on that individual status around taxes. Can you talk to us around that and share with us some things that we probably should be looking at this year?
Oh yeah, absolutely. So, you know, oftentimes people ask, well, what can I do about my taxes? Well, we talked about health insurance and FSAs and HSAs and 401ks. And there's other types of retirement accounts, right? But one of the things that you can do to have a pretty strong influence over your taxes is having a business. Basically, there are some people who have hobbies, for instance, right? So you got a hobby, you're not really doing it for the money, but what if you knew that if you just change the way that you operated with this hobby and maybe turned it into something where you are trying to make some money, you do charge for your services, you do handle this hobby and switch it now, handle it in a business like manner, right? Now you can experience some tax benefits, some substantial tax benefits, and have control over how much taxes you pay. Not to mention, starting a business is a way for you to make more money, have an influence over your income. A lot of us, we may be working in a job, right? And we're trying to figure out, are they going to increase our, they're going to give us a bump in pay, 3% or, whatever, 6%. And we're waiting on them to, give us this bump in pay. But, we also have some control to be able to say, hey, you know what? I'm going to give myself a bump in pay through some skills that I've developed over time. Or you can just, YouTube is a great place to learn some new skills. And so you can start a business, and as you're operating this business, as you're making money, you can also be, obviously get you a CPA, get you a tax professional that can walk with you through that process. But the key is you're trying to make money in this business, and you're wanting to know, how can I save taxes? That's the question. And I would say that there are a ton of ways in which you can save taxes, but most people, it's about your what we call deductions. So every business is going to have some business expenses, right? They always say you have to spend money to make money, right? And
Right.
so but a lot of times business owners, they don't realize that there's money that you're already spending, that even if you didn't have a business, you would still be spending this money. And now that can actually become a business deduction and lower your taxes. And so I think that when people start realizing that, they can have significant influence and control over their taxes through a business, as well as increasing their own income, then you'll begin to see even more people start to, get into owning a business. I did want to add one more thing. So, like you said, individuals, right? When you are an individual and say you start an LLC, right? A lot of people are doing that now. Um, the default tax classification for a single owner LLC, or a single member LLC is what they call it, is to be taxed like a sole proprietor. A sole proprietor is basically like, I always use the example, like I just start, I go out, knock on people's doors and start cutting grass. I don't have an LLC, I don't have a business bank account. I'm just kind of hustling. I'm out there shoveling driveways and cutting grass. Um, that person gets taxed the same way as a single owner LLC. You use the same tax forms, and it's all happening on your personal income tax return. But that is truly a business. If you're not working for someone, you're self-employed, and that by doing that activity, you can actually save money in your taxes. And so I would tell people, reach out to a CPA. That's a good start. I would say probably the best place to go if you want to have a better understanding of how that works. And I do have an ebook. It's a shameless plug, but I do have an ebook kind of talking about that, because I I get people asking me that question all the time, and I can't talk to everybody. So the ebook is a good way for people to kind of get that information as well.
And can they find that on at GatsonCPA.com?
Yes.
Okay. And so I know it's in your ebook, but can you give us just like a couple of like different write-offs that we could be looking at this year, whether it's, mileage, food? Can you just give us a
Oh yeah.
handful of things that we should possibly be looking at right now, and begin to start organizing and being proactive about?
Yes, I would say, yes, anytime you drive your car for business, you will get a write off for that. If you go out to eat with someone who is like a potential customer, you're trying to sell them on your product or service, you can write off that meal. In other words, you can get a tax deduction for paying for this business meal. Um, I would say some of the most potent tax deductions that you can get, and ones that are not like widely used, would be number one, hiring your kid in your business. So if you do have a kid that's under the age of 18, then you can have them do some administrative tasks or just any types of tasks that are, kind of in your business. But oftentimes these are like administrative related tasks, copying, filing, things like that, answering emails, maybe some advertisement, like through social media. But you can actually pay your kid, and when you pay your kid, it's a tax deduction to your business. But to them, it's not taxable income as long as you pay them under what's called the standard deduction. So that standard deduction changes every year. For 2023, the standard deduction, I'm looking for it real quick here. Standard deduction is 13,000. I'm gonna find it. The standard deduction is $13,850. So you could pay your kid up to $13,850, and then they can pay for stuff that you normally pay for them, right? Like their food, their clothes, their school supplies, their video games, things like that. And again, to your business, it's a deduction, which means that you're paying less taxes as a result. But to them, it's not taxable income as long as they've earned under $13,850. So that's like one of the best tax strategies for a business owner, because just with one kid, if you were to pay them up to that $13,850, you're going to save in taxes, I don't know, roughly about 20% of that, which is about almost $3,000 in taxes. That's just on one kid. Another thing would be, talk to your CPA about this, but like hiring your spouse in the business could open up a whole lot of opportunity for you to write off business meals, to write off a potential vacation, as long as the circumstances make sense around how you do that. And then last but not least, I would say that there's a tax strategy. It's called the Augusta Rule. And you can actually use your home, basically rent your home to your business to conduct certain types of meetings. And so, like, if you say you have like a CPA, right, um, who's an advisor to your business, you can have a meeting with your CPA at your house. And because you're the, say you're the owner or, renter of your home, your business can pay you as the person for the use of your home. And under the tax law, as long as you have under 14 days of rental income on your personal residence, it's completely excluded as an income to you. So that means it's a deduction to your business, kind of similar to paying your kid. It's a deduction to your business, but not income to you personally. So you can, depending on the size of your home, you have to do some calculation, which is why you want to have a CPA helping you with this. But you could get, a $10,000 tax deduction, which would save you $2,000 in taxes. Or if your house is a little bigger, it could be, maybe up to $4,000 or $5,000 in taxes. So,
Good information.
yeah, thank you.
Yeah, such good information. And we want to be mindful of time. We know that our time is running out. And so, real quick, I just wanted to make sure that we just kind of go back and kind of share what we just talked about. We talked about some tips and tools, some benefits on how we can be proactive which will lead us to triumphing over our taxes. We talked about taking advantage of your 401k, which is part of your employer benefits, HSAs, an FSA, and the HSA is a health savings account. FSA is a flexible savings account. And then also, we didn't talk about how you can have a 401k as well as an IRA, but we can definitely talk about that at a later date. But having all those can save you money on the front end when you get paid, as well as we just talked about some different types of deductions that we can begin to start looking at and taking advantage of in 2023. If you have a business and if you have a hobby and you haven't turned it into a business, I encourage you to look at turning it into a business in 2023. Most importantly, get with a CPA like Melvin Gatson. His number is right there on the screen. CPAs are great for strategizing, right? In particular to your circumstance, to your home, to your business. And so even when it comes to investments, they help with decision making, making sure that it's right for you and your household as well as your business model. And so, Melvin, can you just, before we leave, can you just encourage somebody out there who may have been having a tough time with their taxes? They might even be behind on taxes and haven't filed for the last couple of years, but someone who is really struggling and having challenges around taking that next step. Can you encourage them? And then we'll end.
Oh yeah. I would encourage anyone who's struggling, scared about taxes. Maybe they haven't filed taxes and they just don't know what to do. I would say give me a call. You'd be surprised. There's typically ways in which it won't be as bad as you think. Um, you know, there are ways in which you can settle tax debt. You can get penalties and stuff like that removed. And payment plans. There's a lot of options. A lot of people are scared of the IRS, but really the IRS wants you to be able to continue making money so that they can tax you on it. So they're not going to, they're really, the IRS is kind of a business partner to you in a way. And so I can kind of help, usher you in, through that process. And so I would say, don't be afraid, contact the CPA.
Awesome. Thank you so much for joining us on today. And Melvin, thank you so much for just enlightening us on all this great information. And I just want everyone to know that our mind is our greatest asset. And so having a healthy mindset is very important. And health is wealth. What good is wealth if we're not in good health? So we'll see you on next Monday at 12 p.m. for another time with us for Mindful Monday. Have a great week. Thank you.
Bye.